Hello there, you're watching Your Trades on ET now. I am Snehisha and with me is Shreyansi Singh. Let's talk about the day that was, because while we have ended in the red, it's not been all that bad for the Nifty today, because remember in the first half of the trading day, we opened below the 21,000 mark and it's the day 22,000 mark, pardon me. The day's lowest point is 21,964. So we've at least closed a good 120 points off the day's lowest point, and we've closed at 22,082. So we're comfortable at least above the 22,000 mark on the Nifty, although it's been a 0.2% cut coming in on the benchmark. Let's take a look at what the Sensex has done. It's largely in tandem with the Nifty as well. You have a 0.2% cut coming in on the Sensex too, and that's where the Sensex has closed today just shy of that 73,000 mark in today's trading session. The broader markets was where all the eyes were today, because Nifty mid-cap has ended rather flat but with a slight positive bias. It was the smaller end of the market that was taking away all the spotlight today, because almost a 0.7% uptick coming in on the small cap index. So that is one space that has done very well in today's trade. India Wix, on the back of this advance decline ratio being slightly skewed in the favor of advances, but nonetheless India Wix is up 0.5%, but we're below the 14 mark on India Wix, so not much to worry about. Nifty Bank also has held up quite steadily, a 0.3% uptick coming in. It's BPCL, SBI of course on the back of that double upgrade coming in by Citi from sell to buy, also target price hike to 800. SBI looking good. You have VEL, Shriram Finance, Adani Enterprises, TCS and Trent, all of them lending support to the market. On the flip side, what was heavily under pressure was Bajaj Auto, a 5% cut coming in. Hero Moto, 3.2% cut coming. It's the entire auto space that was under pressure today. Bajaj Finserv, HCL Tech, Eicher, Nestle, all trading with cuts of between 2 and 5%. Sectorally, if you take a look at what's done well today and what's not, it's the day of the PSU banks in today's trading session. A couple of these have done very well today. Union Bank, IOB, SBI, UCO Bank, Central Bank, all of them have done well. Nifty Energy, Metal and Nifty Bank, and surprisingly Nifty Realty with a slight positive bias has ended in the green. What's not done well, like I mentioned, Nifty Auto, IT was the second biggest loser today, and FMCG and Pharma. So it's basically all your defensives have ended in the red, and the broader markets have done seemingly well in today's trading session. Also today being the 4th of March, the Trump imposition of tariffs, the 25% tariff on Canada and Mexico has come into play. China has retaliated with an additional tariff of up to 15%. So lots of action has happened on the global front as well. But Shanti, what else are you tracking back home?
Well, absolutely lots to track, and I feel like my list definitely has to start with tariffs, because when you take a look at the commentary coming in, this of course has been a particular topic that has been in the spotlight. You do have commentary that has been in focus ever since Trump took the keys to the Oval Office as well, and Trump of course has imposed 25% tariffs as far as Canada and Mexico are concerned. And you do have retaliation coming in as far as Canada is concerned, so that's an important update coming in right there. Of course, China has also retaliated, speaking of retaliation, with additional tariffs of up to 15%. And this is, of course, according to reports, and that is also something that we're keeping an eye on. Any sort of commentary coming in on tariffs is also something that we'll be watching out for very keenly, especially since you do have countries also retaliating against these kind of tariffs that Trump has gone ahead and imposed to the tune of 25% as far as Canada and Mexico are concerned. Other than that, apart from the counters that Snehi mentioned, you do have CLSA's high conviction outperform coming in for Varun Beverages, and on the back of that, you did have that stock that was up about 4% thereabout. Of course, you do have, in terms of news flow, the Bombay High Court staying the FIR against SEBI as well as BSE. And there was some important commentary as well coming in, chiding the lower courts as well for taking up the case. And that is also something that was an important update that we saw coming in, Snehi.
Absolutely. So lots has happened in today's trading session, but let's understand about the day that was and the outlook going ahead. Nilesh Jain, the head of derivatives and technical research at Centrum Broking, is joining us. And Nilesh, thanks so much for taking the time out and speaking to us at ET now. What have you made of today's trading session? Because we had quite the scare slipping below the 22,000 mark. But a lot of analysts that we have been chatting with recently say that this is inevitable, and sooner or later we are going to be testing the 21,000 level as well. Is that the view that you share as well going ahead? And what are the levels that you are spotting for the benchmarks?
Well, there's no doubt about that. The major trend is still looking on a weaker side, but it's very difficult to say whether Nifty will hit 21,000 because that is still too far away from the current market price. But as of now, it looks like there has to be a kind of a dead cat bounce or a relief rally, which is due since a long time. The RSI for the Nifty is trading somewhere around 22, and historically we have seen whenever RSI touches the mark of 22 or below the same, then we have seen a strong rebound. So similar kind of rebound can be seen. And today, interestingly, we have seen a good closing across all indices, be it Bank Nifty, where it ended above 48,000 mark. And similar with the case with the Nifty as well, where it defended 20,000 level on the closing basis. So that's a good sign. Even if you see in the broader market, the small cap ended on a positive note, mid cap somehow managed to close on a flattish note. So these are the signs that we may see a follow-up on the low, on the upside going forward from here. But it looks very difficult that this move will be a sustainable, because there are multiple hurdles, and the major structure is clearly a lower top and lower bottom. So going forward, we are expecting Nifty to test 21,600, 21,500 levels on the lower side. But before that, yes, there could be possibility of a dead cat bounce, which may take Nifty towards 22,300 to 22,500. So as of now, the focus should be on stocks and sectors rather than focusing on indices, because we are expecting some bit of consolidation to continue.
Penciling in some green shoots as far as the market is concerned, and a little bit of tinge of green is also what we saw coming in. It looks like the absence of bad news is good news as far as the market is concerned. Let's see if that dead cat bounce that you're talking about makes its way to the market as well. But Nilesh, I also wanted to ask you if you have any picks for our viewers. Which are the stocks that you're keeping on your radar?
Absolutely. So as mentioned, we are focusing on stock specific action. So one couple of stocks that are on our radar. First of all, CESC, Calcutta Electricity Limited. So this particular counter, in fact, if you see, it has given a kind of a inverse HNS pattern breakout. So looks strong on the chart. Even if you look at the derivative data, where we have seen a build up on the long side with OI addition of close to 7%. So we are expecting a follow-up move in this particular counter towards the levels of 146 to 150 with a stop loss below 133. CESC can be bought. Apart from that, chemical space, within this space, SRF, this particular counter has given a good close today. So looks positive for a follow-up to continue towards 2970, 2970 will be the target on the upside, with a stop loss below 2810. SRF can also be bought. And lastly, PFC, REC, in fact, these two stocks have given a good reversal candle today. So PFC, we may see a follow-up to continue towards 395 to 400 on the upside, with a stop loss below 376. PFC can also be bought.
Okay, Nilesh, thanks so much for joining us with your market view as well as what's looking good on the charts right now. On that note, we'll let you go. But let's keep it going with word coming in from experts. And time now for some interesting market opinion from Ajay Srivastav, who believes we may just be in the last leg of the FII selling. Even as we look ahead, the IT sector continues to be the most vulnerable. However, he sees merit in buying back those PSU counters. Why and what's the rationale behind this? What's looking good in the market right now? Let's go across and listen in.
Good news is, I think we are done with selling by and large. I think we're the last legs of FI selling, maybe a week, 10 days, 15 days at best. I think that should not last more than that, whatever indication I'm getting. The sector most vulnerable, of course, is IT, because it's held only by FIs by and large, not held by the locals. So I think that's the most vulnerable sector at this point in time. Domestic sector, PSUs, my goodness. If there ever was a chance to buy them again, you have got it now once more. Yes, and this is what we keep saying. PSU is cyclical, now with the Ps of 3, 4, 5, 7, including the P metal companies, with dividend yields what they are. You are back in business, guys.
All right, and that was the word coming in from the wires. It seems like the sentiment that is echoing on the street is that this is the last leg of the correction, also something that A. Bala also mentioned, but we'll get you a little bit more on that commentary later as well. First things first, let's also get some more details on the much dreaded Trump tariffs that come into effect on Canada, Mexico and China, showing that the US president is sticking to his guns as well. But experts also believe that this could be inflationary for the US economy, also cause disruptions when it comes to the global economy. We have Sumita who's standing by with an explainer. Sumita.
Well, after Donald Trump announced 25% of tariffs on Mexico and Canada and 20% tariffs on China and Canada have retaliated. Canada, according to what reports are suggesting, as part of its tariff package plan, Canada is planning an imposition of tariffs on goods worth $107 billion that are coming into Canada from the United States. These also include non-tariff measures as well. As far as China is concerned, well, the Chinese Foreign Ministry, the Commerce Ministry of China, I beg your pardon, just a few hours back had stated that the imposition of tariffs on Chinese products going into the United States. These tariff measures were in contravention to the rules of WTO, and of course these undermine multilateral trading systems. And now China has announced 15% of tariffs on a number of US agricultural imports. That includes cotton, wheat, corn and chicken, 10% tariffs on dairy products, fruits, vegetables, pork, beef and soya-bean, and it's on March 10th that these tariffs will kick in. Chinese Commerce Ministry, in fact, has placed 15 US companies on an export control list and 10 US companies on the so-called unreliable entity list. Now, it remains to be seen what the Mexican government really decides and comes out with. We're waiting for the press conference to happen from Mexico. Meanwhile, as far as this tariff imposition is concerned, Donald Trump has negated all fears related to how these tariffs will impact the US economy. He has stated, and he's justified that these tariffs by stating that these are essential to protect the US borders. He stated that the fentanyl crisis is only escalating in the US, and which is why he's putting these tariffs on China. Meanwhile, as far as India is concerned, India is keenly looking at these developments as the country's commerce and trade minister is currently in the United States. This was an unscheduled visit. He's there to negotiate a bilateral trade agreement.
Okay, Sumita, thanks for all of those details. We'll bring Sumita on board once again when we have an update on how that meeting has panned out. But also on the back of these Trump tariffs, this commentary has sent jitters across markets. What do experts have to say about the potential impact of these tariffs and the road going ahead? Let's go across and listening to a whole panel of experts on the same.
The fact that we are now in an open trade war tells you that it's not going to end just with Canada, Mexico, and China. If he's going to go all out against these guys, please let nobody think he will not come after lots of others. If you ask me, what he is doing is disastrous for the USA as well as the global economy. I mean, that would be my view. Mr. Trump seems to think that because on his last occasion, when he put up some tariffs on steel and aluminium, there was no great rise in inflation. And because there was no great rise in inflation, he seems to think that he will get away with it this time too. I'm afraid the situation is very different.
Series of concerns which is being expressed. One started from high valuations. Indian market has been one of the best performing market. Across the board, Indian markets have done well, respect to the market cap. And having seen a significant rise, there was some expectation that this valuation is not sustainable if there is a slowdown in the overall momentum and the growth momentum. The market knows a little bit ahead of time in terms of price correction. That's why what I feel the correction that we have witnessed is largely, I think, pricing in most of the uncertainties it has been created. I would say we are on the last leg of uncertainty.
The Chinese leadership has said a tariff war doesn't help either of the sides. It harms both. So I think that is where it will end. But the time frame for its ending, whether it's going to be 6 months or 1 year, one doesn't know.
We have a very strong long-term view on India. A lot of investment into India is based on index funds. And to the extent that retail investors and some institutional investors are selling their emerging markets funds or their Asia funds in general, that's going to affect India.
All right, and there you go. That's the word coming in from the experts as well. That's the biggest talking point, Trump's tariffs. How will these play out then and shape the global economy? Could higher tariffs on steel and aluminium then hurt global growth? Ashesha is standing by to explain the dynamics.
Well, yes, several announcements have been made by US President Donald Trump when it comes to its implications on the metal sector. One, of course, additional 10% tariffs that have been announced in China. Apart from that, they've also initiated investigation on copper imports into US. Of course, nothing has been finalized with respect to additional duty that can be levied on copper. But as far as steel and aluminium is concerned, additional 25% tariffs have already been levied, and this was announced a couple of days ago. Remember, as far as copper copper is concerned, several Indian players are into this business. So for example, 21% of revenue for consolidated revenue for Hindalco comes in from copper. Hindustan Copper and Vedanta are also impacted because of any changes that happened with respect to copper prices in the global market. But let's also understand tariffs were also imposed during his earlier regime. So what's different? This time no exemptions or no exceptions have been granted. In fact, when we were talking to a couple of companies, managements were highlighting that they are hopeful of that company being exempted from these tariffs that are being levied. But Donald Trump has been very clear this time around, no exception or no exemption for any company whatsoever. So several Indian players might not be directly impacted, but indirect implications could be seen on several companies with respect to its implication on prices. So for example, all those countries which will not be able to export to the US will now be flooding other emerging markets into India, which means supply is expected to grow up, and as compared to demand, if supply rises, prices also could trend lower, and hence we could see indirect implication on metal prices in the global market, and that's how Indian companies could be negatively impacted. But guess what? Lower metal prices, of course, is a positive for the consumers of these metals, and the most important beneficiary will be the auto sector, because nearly 20 to 25% of raw material basket constitutes metal for auto sector. And hence most of these consuming sectors will be positively impacted on account of lower prices. But yes, for now we do not expect any kind of direct implications on the metal sector. All the prices could trend lower, but auto sector and some other beneficiaries like the real estate and infrastructure sector could also be positively impacted.
Thanks so much for taking us through all of those details. While we were highlighting a couple of stocks that were abuzz in today's trade, let's take it across to my colleague Rabinder, who's standing by with a list of some more stocks that were in the spotlight today. Rabinder.
Well, Sudarshan Chemical is in focus, where Sudarshan Chemical has completed the acquisition of Germany-based Hubeck Group in a combination of asset and share deals, and company has expanded Sudarshan global presence with operation across 19 sites in all over region. And the Sudarshan Managing Director, Mr. Rajesh Rathi, will lead the combined entity as a CEO. Moving to next, Swiggy and Zomato is also in focus on back of brokerage note, where ICICI Security has come out with a note on both the stock, where they have maintained buy rating on both Swiggy and Zomato. For Swiggy, they have given a target price of rupees 740, and for Zomato, they have given a target price of rupees 310. This says that the food delivery stocks are being ignored by the investors, and the concern were regarding increasing cash burn in quick commerce due to higher discounting by Zepto. They say that the Swiggy consolidated is now trading at an almost 30% discount at a par value for food delivery business, implying a negative value for the optionally of success in quick commerce. And the Zomato, on the other hand, is trading at a value that ascribes nothing to quick commerce. Lastly, they say that the anomaly is unlikely to sustain long, and especially given a robust outlook for discretionary consumption from May 2025. Moving to next, SBI were also in focus on back of brokerage note, where Citi has come out with a note on SBI. They have double upgraded the stock to buy rating from sell. They have hiked target price to rupees 830 from 720. They say that the SBI is taking step to reduce cost and increase earning, and since only 28% of the loans are linked to EBLR, SBI can handle interest rate changes better, and the growth is supported by Express Credit, a strong pipeline of corporate loans, and a faster home loans approval. And SBI is cheaply valued at 0.85 times book with a 1% ROA and 15% ROE. And lastly, Zydus Life Sciences are also in focus, where Zydus supported by the Gates Foundation to develop the world's first combination vaccine to offer protection against Zika and typhoid for infants and children.
All right, then thanks, Rabinder, for getting us that entire list of stocks that were buzzing away in trade. But with that, completely out of time on this edition of Your Trades on ET Now.